Rebecca, when you think through what has already been priced in, what's being left out?
So I think what's being left out is the potential that we see Iran engage in the Strait of Hormuz. Now, this doesn't mean we see a full blockage, but the fact that they did target a container ship prior to launching those drone strikes and missile strikes tells me they were giving Israel and the world a little hint that if things continue to escalate and they're provoked further, they would not hesitate to potentially target crude exports and container ships through the Strait of Hormuz. So looking at that element, that could have a very significant impact, direct impact on crude supplies. And I think the market may be discounting that a little bit because what we saw over the weekend was an avoidance of the worst case scenario. So we're seeing kind of a relief that we didn't see Iran's attack actually hit any of Israel's infrastructure or cause damage to or deaths to civilians. And so we're seeing an unwind of the tail hedges that were put on at the end of last week. But I do think if we look at where the risk lies going forward, if Israel does not heed the US's cries to not continue to escalate this conflict, that's where I think the risk is. And I think that's where the market should be looking.
You know, there's so many near-term moves, Rebecca. How do you think about where Brent and WTI end 2024, given the confluence of factors we're dealing with this year?
So that's a great question. And I actually think we end 2024 very close to where we are right now. But that does not mean the path won't be extremely volatile. There's a significant risk as we head into summer driving season, and the demand profile in crude has remained very resilient, and supply has been somewhat constrained, that we do see prices rise into the mid 90s for Brent and maybe 90 WTI. I think the governor on rallies above that level is obviously OPEC spare capacity, which you mentioned in the lead-in. They've got 5 million barrels sitting on the sidelines. I don't think OPEC Plus is looking for a price spike. I think what they're looking for is sustained, low volatility, high price markets around 85 to 90 Brent, where they can bring back some barrels and regain their market share and gain control of the market the way they have been without losing it to a potential SPR release. So I think we end up here, but we could see a rally into summer as OPEC brings back barrels. We could see a retreat, but a net, I think we're kind of right here at the end of the year.
Well, it's interesting because recently you've written that crude is unlikely to spike higher and breach $100 a barrel. Let's take devil's advocate for a minute here. What would cause that to change?
I think that what would cause that to change would be one, a clear supply disruption coming from the Middle East, as I mentioned, if Iran does start to target the Strait of Hormuz. Two, we see Ukraine start to target Russian crude exports as part of that conflict. And three, a reluctance of OPEC Plus to bring back barrels. So I think those are in order of the potential that they happen. So I actually think OPEC Plus will bring back the barrels. But if they don't, that is the scenario where we see crude spike above 100, as long as the demand profile remains robust as it is, and we see supply disruptions potentially emerge both from the Strait of Hormuz and in Russia. That's a lot of things that need to go wrong for us to get there, which is why I don't have that as the base case. I don't think we breach 100. I think we kind of bounce around this 85, 95 level with a high volatility, very headline-driven market, but end up right where we started.